Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading and Derivatives Education here at Schwab, and this is Getting Started with Thinkorswim. Today, we're going to have some fun. We're going to be looking at a tool known as the Risk Profile tool on the Analyze tab on the Thinkorswim desktop platform. And this is a tool that, if a trader knows how to use it, it can allow them to take a potential option trade and on one chart see the potential for profit, for loss, the probabilities of success or failure, and we can even do that for an entire portfolio all at once. So powerful tool, but it does have a bit of a learning curve. So today I want to help everybody along that learning curve. This is going to be a great discussion. Before we get to that risk profile tool, let me first of all say hello to everybody who's chatting in out there in YouTube. Hello there, Richard, Sharon, Eva, Jay Frost, Scott, Greg, Gandakar, Jackson, Jack, and everybody else. Thanks for joining us week after week. We always do appreciate your attendance and your contributions to these discussions. If you are here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the live stream has concluded, we'll enjoy the presentation, but be aware that you are invited to join us in this live stream. This is a Wednesday webcast series. We kick things off promptly 2 Eastern time. If you want to join us, it'd be great to have you here. I also want to let our live stream audience members know that we have Kevin Horner. He's going to be hanging out in the chats. Kevin's going to be addressing any questions that I can't get to just during the flow of the presentation. I've said it before. Kevin and I have been working together now for years. Great to have Kevin there. Kevin, thanks for having my back. And everybody, if you have an account on X, you should be following your favorite presenters there on X. You can follow Kevin on X at Kevin Horner CS. You can follow me there at Cameron May CS. Really is the very best place to connect with me. I was just on X just a few minutes ago, answering still a few more questions just before the launch of the webcast. So yeah, if you reply to one of my posts on X, I try to reply right back to you. But let's get right to our discussion here. And of course, as we do, there are risks to be considered. So bear this important information in mind. Options carry a high level of risk and are not suitable for all investors. There's risk involved in all types of trading, including the loss of principal. Schwab does not recommend the use of technical analysis as sole means of investment research, and any investment decision you make in your self-directed account is solely your responsibility. All right, now, this is lesson 7 in a series of 8 lessons that are designed to take that brand new user of Thinkorswim toward a good level of confidence in the navigation and usage of the tools on the platform. So here's where we've been. Lesson 1 was just downloading and navigating Thinkorswim generally. Then we got into the specific tabs: monitor tab, trade tab, chart tab, scan tab, market watch tab. And now we find ourselves on the analyze tab, and we're going to zero our attention in on that powerful risk profile tool. So go ahead and chat in. Let me know. Are you a user of that risk profile tool? Are you familiar with it, or are you at the front end of your own learning curve with that tool? We want to give our time today to exploring that tool. We're going to build an example trade. We're going to analyze it using the risk profile. And then we're going to look at how that tool might help a trader gauge the profit and loss scenario for an entire portfolio. So let's go right to the Thinkorswim desktop platform. And just to set the stage for today's discussion, and this really does highlight one of the primary potential benefits of the tool. It can allow a trader to assess the potential pros and cons of an option trade that they're planning before that trade is placed. So let's position ourselves in the shoes of a would-be AbbVie options trader. Let's say that our trader has noticed that this stock has really been using that 200 area as resistance. There's been a price ceiling, and you can see even on recent rally, there was a hesitation for about 6 trading sessions where we just couldn't quite get above and stay above $200. And finally, we pushed up and through. And maybe the trader thinks, well, maybe this will lead to one of these sorts of moves. So they're planning possibly a bullish option trade. Now, this is just going to be an example. But let's say for today, let's break down a long call vertical spread, which is a bullish strategy. So just so you know, this is a tool that is primarily geared toward options traders. So I'm going to assume a certain degree of comfort with options, but let's go ahead with this. So let's go over here to our Analyze tab. And the first thing we need to do is build that example trade. And rather than going to the trade tab, and I could do this there, I'm going to go to the analyze tab and select add simulated trades. Now, once we typed in our symbol here, we're going to get the option chain that should be familiar to our options traders. It's the same chain that appears when we're on the trade tab, but this allows us to build those simulated trades that we're then going to analyze using the risk profile tool. And for today, let's say that our trader is maybe looking at the 19th of September. Let's go down to that expiration. And how about with our stock having just broken through up above that 200 for the first time in months? How about if we set up a trade doing the 195, 200 long call spread? It's a bullish strategy where the trader just prefers for the stock to stay above 200. That's it in a nutshell. Quick way to place that trade is to go up here where it says spread single. I'm going to change that to vertical, come back to my two strikes that I was interested in, the 195 and the 200. And let's click on the ask price to create that initial buy order. And it looks like that's right now trading, somewhere between 310, 355. Let's try to get this order entered at 335. So once I've made that change, you'll see this locks into place. It's not going to change. Now, we actually could just confirm and send this order if we wanted to from here, but we can also go analyze its potential for profit or loss. I run into this all the time when I'm teaching new options traders. I wish there was, they'll say, express sentiments along the lines of, I wish there was just a tool that would just show me how much I can make or lose and what the probability of success or failure. Well, that is a possibility if we use that risk profile tool. So once we've constructed the trade using the add simulated trades function, we can actually, just without doing anything else, just go over to the risk profile. And this has already preloaded a profit and loss chart on this tool. So we're going to start top to bottom, left to right, get acquainted with the functions of this page. But let's see how many of you want to admit to this. I'm going to ask a question. Don't admit if you're not comfortable, but how many of you have maybe encountered this tool? You play around with it a little bit. It seems complicated. It seems like there's a learning curve to it, so you kind of back away. Ooh, this is a little bit heavy lifting. Can be. I'll grant you that, but I think by the time we're done today, everybody should be feeling pretty comfortable with the navigation of this tool. But by default, what we're seeing here are two potential profit and loss lines. So we have this red one, and then we have a blue one. Right? Your color schemes on your platform might be a little bit different based on how you have your color set up, but that's what we're going to be viewing today. The red one, though, is showing us the potential for profit or loss if we let this trade go all the way to expiration. The blue line shows us the potential for profit or loss at some date before then and starting by default today. Okay. Now, if you're not seeing the default, you can just come right up here, because some people get in here and they play around. They get things sort of out of whack, and then they are worried that they've broken something. No, we can just hit reset. It'll ask us, are we sure that we want to do this? And it just resets everything back to its defaults. Okay. So in any case, I'll talk about these profit or loss lines in just a moment, but I do want to show even our veteran users of this tool, here's a little function that sometimes gets overlooked. Do you see this little mini chart up here in the upper left? Some of you may be familiar with the fact that sometimes we'll see a profit and loss chart. If it's a complicated strategy, if it's maybe they're more distant strikes, or we've gone way out of the money or in the money, you'll see these profit and loss lines go off the top of the chart because they're going so far. Maybe they're getting obscured off to the left of the chart or the right of the chart, whatever. Well, some of you might be familiar with the fact that we can actually resize the chart. We can just come down here across what we call the x-axis, click on it and drag it back and forth. And that can expand or contract that chart. We also know that if we click directly on the chart, we can drag it back and forth without expanding and contracting. We're just repositioning it. But what some have not discovered yet is if we come up here and click on this. Now, if I click on this, it doesn't look like it did anything. That's because I have a multi-monitor set up here at my desk. And a new tool has popped up, but it popped up on the side screen. So what I need to do here, let's just expand this left column a little bit and click on that. Now you can see this, okay? But by default, this is going to say float the Y scale. If I choose fix the Y scale, in other words, don't move it around unless I move it, here's what that now allows me to do. For those of you who have already used this function and sliding back and forth as a function, we now can do the same thing with the price. Look at this. Or if I click and drag on the chart itself, I can move it all over, up and down and left to right, which is very nice when repositioning, more complicated trades, that sort of a thing. In any case, let's go back up here. I'm just going to set that back to float, so it's back at its default. So let's get acquainted with the functionality of the tool. So what this is doing right now, you'll notice down below is our trade, and right now we have one contract in a vertical spread with a 335 debit. And so what we probably know, if we're familiar with vertical spreads, is if we pay 335 for a $5 wide spread, that leaves $1.65 for profit potential. 335 investment, $5 spread, 5 minus 335 leaves $1.65 that could be made. Well, that's actually being displayed. Even if we don't know that math, we can see that on our chart. So if we look over here on the left, this is our y-axis. It's also the profit or loss axis. You'll notice it has positive numbers and it has negative numbers. These are dollars that could be made or lost in this trade. Now, down across the bottom are prices. And you'll notice right here is this vertical dashed line at 201.07. That seems kind of random. It's actually not random at all. That is the current price of ABBV. So really what this chart is showing us is it's showing us how this trade is likely to perform at expiration if our stock goes up from where it is or down from where it is. And so if we just look at the current price of the stock and we ask ourselves the question, I wonder how this trade would do on September 20th, that's the expiration of these contracts. Wonder how this trade will have done if the stock doesn't go anywhere. If it just stays at 201.13, well, I can intersect that with my red line. My red line is my expiration profit or loss line. And you'll notice, hey, it's right up there at its maximum. You'll notice this horizontal line for profit comes right in at about 165. As a matter of fact, I can see that numerically. If I point up here, I can look down here in this box in the lower left, and I know there's not a strong contrast between the red numbers and the gray field that they're sitting in. But as I point at that, look down at those red numbers, and you'll see 165. So the chart is already telling us if price doesn't budge, when we get to expiration, we're at maximum theoretical gain for this trade. And really, if price goes up, let's say price goes up to 210. Well, we're still intersecting with maximum gain. We're still seeing 165 at that expiration, 165 profit, and really anywhere above our strike price, our upper strike price of 200. You can see this tops out right at 200. So that at expiration represents our maximum gain of $165. Well, you'll notice there's another horizontal line down here intersecting with minus 335. That's our maximum loss for this trade. And I can see that occurs at expiration for any price below 95. So if we intersect at 195 and we look at any price lower than that, we're at maximum loss. Now, in between those two prices, 200 and 195, we're not at maximum loss, and we're also short of maximum theoretical gain. That's why we're having this diagonal line here. This is showing us that, yeah, we've come up either just short of maximum gain, or we've fallen into loss territory, but not all the way down to maximum loss. And somewhere in between, we hit something known as the break-even point. That's this red hash here. You'll notice that intersects on our profit or loss axis, 0. That's break-even. So at a glance, I could create this trade on the Add Simulated Trades. I could pop over to the risk profile, and I can see, oh, $165 maximum gain, $335 maximum loss. Maximum gain is anywhere above $200. Maximum loss is anywhere between 194 or 195. And in between is that break-even point. As a matter of fact, break-even point on a trade that has $1.65 of reward potential is going to be $1.65 below that maximum gain area. So 200 minus 165 takes us down here to the break-even of 198.35. That's the break-even. Gina says, can you show an example of just a call on this stock? So Gina, I could. I don't know if I'm going to have time to do that, but what would you envision this would look like? Well, with a long call, there's a maximum loss. It would look like a horizontal line here, but there's unlimited gains. So we'd see that profit just continue to grow and grow and grow as price goes up. That's what it would look like. Sometimes that's referred to as a hockey stick chart. If I turned it around to make it look like what you're looking at, it'd look like that. Yep. But that is this red line. Now that we're well acquainted with that line, we can now acquaint ourselves with this blue line. The blue line is still a profit or loss chart. It's just a different time other than expiration. And by default, it's going to be today. So today is August 13th. That's the date as a recording of this session. So I can see and ask myself questions. I wonder how, with the price at 201.11, I wonder if the stock started to move before expiration. What if it started to move today? What would be projected gains or losses? What if we popped up to 210 today? Well, that intersects right about here, for a profit of about $88. So now I'm looking at the blue number over here, not the red one, but the blue one. Maybe we're at about $90. What if price fell today? What if it fell all the way down below 195? Isn't that our maximum loss territory? No, that's maximum loss at expiration. Before expiration, there's still time for recovery. So we haven't hit maximum loss yet, but let's say we're down at 194-ish. We might be looking at a loss of 103.63. If you squint your eyes again at these colors here. By the way, if you want stronger contrast of these colors, you can actually just right-click on them and change the color scheme. You'll get a little pop-up palette like this. So for example, let's switch this one to orange. So you'll notice that changed the color scheme to orange, and now we have an orange line on our chart so that it coordinates with the numbers being displayed. So we have profit or loss for expiration. We have profit or loss for today. Well, there are a whole lot of days between now and expiration. So there's a big unaddressed question. What if the stock is behaving? What if it's going in the right direction, but we haven't got to expiration yet? Or what if the stock is faltering? It's going down, but we haven't hit expiration yet. That's where we can change the date down here in the lower right. Now, there are two dates. I'll talk about both. They have very different functions. So looking down here at this lower right, I'm going to start clicking on this. But as I do, I want to coordinate this with these other lines on our chart. Okay. Now, I've done some tinkering here. Let me just set these to what you would typically see. A typical default is to see these lines positioned at the current price, and then one line off to the right is 10% higher than the current price. One line off to the left is 10% lower than the current price. And those are known as price slices. It's like it's slicing up the chart right now into quarters, right? But they're just slices coming down through the chart. And you can see the numerical values associated with those slices right here. So you'll see here are three slices, 201.14, that's the current price, 221.25, which is 10% above 201.14, 181.02 is 10% below. And then we can look across this row of columns, and this starts to tell us in numerical terms how our trade is doing as price rises or falls, but also as other variables change. But it also can give us projected Greeks. I'm not going to spend much time on the Greeks. I think that would be getting a little bit deep in the weeds for an audience for a webcast series known as Getting Started with Thinkorswim. But let's look at the profit or loss open column, all right? But here's another thing. You'll notice that our trade's kind of disappearing. I've opened up another window. It's kind of squeezing things off the bottom. Right here at the margin between our chart and our price slices, if I hover over that, you'll notice I get a double-headed arrow. I can click on that and drag that up. It's just going to squeeze the chart upward, and it's going to create more space down below. So you can see it's allowing now for the order to fit on the screen. All right, but let's start to change some of our variables. We have our default variables here, which is just basically expiration and current date. But what if I wanted to see how a trade is likely doing if, let's say, a week has gone by? So let's take this from August 13th. And I'm going to use you can use the plus or minus to go back or forward in time. We could also click on the little calendar to choose a specific date. So we can come here and choose the 20th. Let me use the plus or minus because I want you to keep your eye on something as I'm doing this. For each time I click on the date upward, keep your eye on this blue line. And as the day goes by, what you'll notice, it's very subtle, but that blue line is adjusting itself upward toward the maximum gain and at the same time downward toward the maximum loss. This forward, I said I was going to do the 20th. Let's set it right at the 20th. Okay, that's a week from today. I could now go up to my chart and see, well, how would my trade likely be doing if the stock were to go up to, I don't know, 210, 220 on the 20th? Or if it were to fall down to 190 or 185 on the 20th. That line has now been adjusted to reflect profit or loss potential on those days. Another thing that's happened is it's changed the profit or loss calculation here numerically. Let me set this back. Let me go back to the 13th because I want to look at a different area of the chart. So we placed this trade a few minutes ago. Right now, overall, it's down $5, not $5 per share. It's about $5 down. Now, this is an in the money vertical spread, a long call vertical spread. Is time working for or against that trade? As time marches forward, if the stock hasn't moved, our trade is still in the money and we're getting closer to expiration. That should be actually adding to the profits of the trade, or if there are losses, actually we just went to break even, it should be chipping away at those losses. Let's test it. Let's click on this date again. I'm going to click the plus sign. Keep your eye on the PL open, the profit or loss. Since we opened this trade on the 13th, now it's the 14th, now it's the 15th, 16th, 17th, 18th, 19th, 20th. You'll notice those days are working in the favor of this trade. And so even without price moving, we're looking at profits starting to mount. And the closer we get to expiration, those profits start to mount up more and more dramatically. Now, at the same time, it's also calculating any potential profits if the stock has gone up 10%, or any losses if the stock has gone down 10%. So that's what those numbers represent. So just by manipulating this field, we're bringing together two of the big three influences on whether this trade works out or not. We're combining price with time. I've specified a time here. Right now we're on September 3rd. And I can intersect anticipated price levels with that time curve and figure out how much the profit or loss would be projected to be at that point. However, that's not everything when trading options. What's missing? What's missing from this equation? Three big major factors in determining the ultimate success or failure of a trade: the day-to-day changes in the value of options, price, time, and volatility. Well, there's a volatility tool here. If we come right down here where there's a little gear icon, I can click on that, and that opens up a new window that says vol adjustments, not volume adjustment. This is volatility. And I can adjust that upward or downward. So here a trader could ask themselves, I know that there are lots of potential variables. That's the life. Those are the waters that an options trader swims in. Sorry, that's the way it is. But it can be very helpful to have a tool at one's disposal that can help one ask questions and get answers. Ask a question about, well, what if my stock goes up by a certain date? That's a good question. Would I be profitable or not? Would I have lost money or not? But at the same time, what if volatility rose or fell during that same time frame? This tool builds that into the equation. So let's keep our eye on things right here. $11.23 is how the stock would be doing, or how this trade would be doing if the stock didn't move at all, but time went by, right? Well, what if volatility rose at the same time? Now, this is a long call vertical spread. And I know it's easy to think, well, with long options, rising volatility should help the trade. So it should increase the profitability of this trade, right? So if I start clicking this to show increasing volatility, my profit should grow. Not necessarily. It depends on how that long vertical spread was constructed. If it's in the money, what that means is that the long option is deep in the money. The short option is closer to at the money. And actually, the Vega influence grows the closer we get to the at the money. So actually, this trade, the short option has the greatest exposure to volatility because it's the one closest to at the money. This one actually would be negatively impacted by rising volatility levels. Watch this. Let's see. Let's keep our eye on this profit. Let's start to dial up our volatility. Uh-oh. Profits are going downward. Yep, that's just what I would have expected. Exactly what the numbers would tell us. But this is that third element where the trader can address all three questions. And these tools are built upon the same algorithms that actual options prices are determined by. So they are extremely accurate if our assumptions are accurate. Well, that's a big if, but it's still a powerful tool, right? So we're starting to peel back some of the layers. Obviously, for our non-options traders, they're saying, Cameron, I have no idea what you're talking about. On the other hand, though, our more veteran options traders are saying, wow, this is excellent. This is a tool that I need to learn. Good. All right. Not every tool is for every trader. I recognize that. So we've introduced ourselves to the profit or loss tools. We've gotten a brief introduction to the price slices, but I'm sure that some of you might be wondering why did it go with 10%? Why do I care about 10%? Not everybody does. We don't know where to draw the slices for every trader, so we just have to pick some defaults and go with it. But I do want to do this. Let's reset everything. I'm going to come down here where we have our menu. You'll notice there's a menu above each of these. If we click on those, you can choose reset and just reset any changes that have been made. Let's reset the parameters. There we go. Just takes us back to break even, or takes us back to the way it was originally. If we want to reset everything on the entire tool, there's a reset function right up here. If we choose reset, it doesn't delete the trade. It just resets any of the little adjustments that we've made along the way. So I'll go ahead and click reset there as well. But let's get acquainted with these slices, okay? And to do this, I'm going to be drawing our attention now to the features up here in the upper right. So there's a date down here that can be manipulated. There's also a date up here. What's the difference? Well, this is a probability date. This down here is the date of the trade. This is a probability date. So here's what I'm going to do just so you can see how it works. I'm going to click on this for today's date, and let's push it forward. And since this is a September 20th contract, let's go out to the September 20th. I'm going to click on that, and you'll immediately note that there is now a gray field behind. It's surrounding the current price of the stock, 201.28. What this is doing is it's using one standard deviation. If you can think all the way back to your last statistics class in high school or college, standard deviation of 68.27, what is that? That is one standard deviation. That's what that 68.27 refers to. And explicitly what it's saying is there's about a 68% chance that our stock is going to fall somewhere between about 217 here and 186 here on September 20th. We all know stock could go up, could go down. It could go way up or it could go way down. But if we were to draw an envelope consisting of one standard deviation, how wide would we have to make that envelope to accommodate a 68% probability of where our stock lands on expiration? Now, that can have all sorts of applications for probability traders. Ooh, now that I know with a 68% degree of certainty where the stock is likely to land, maybe we can start to build trades around that. A trader can use this however they prefer, but I did want to explain how that tool works. Well, at the same time, you'll notice there are other percentages being displayed on our chart. They're not 68%. This one's 38, that one's 42, that one's 10, that one's 9, roughly speaking. I'm rounding just for convenience purposes. What are those? Those are the probabilities that our stock on September 20th lands somewhere between these slices. So let me phrase it this way. There's about a 39% chance on this bullish trade that we're about to place, about a 39% chance that if we stuck our head in the sand and popped up for air on September 20th, that the stock would be somewhere between 201 and 221. About a 39% chance that we land somewhere in there. Great. That's good for this trade. There's about a 10% chance that the stock lands somewhere beyond that, an extra big move. That would also be great for this trade. There's about a 42% chance that we land between 201 and 181, and about a 9% chance that we land somewhere lower. So those are nice, but those are not specifically coordinated with the trade that we're trying to analyze. So a nice feature here is we can just drag these slices around to fit our trade. Watch this. I wonder what the odds are that we wind up not between 201 and 221, kind of random numbers. It's just current price plus 10%. But instead, on September 20th, what are the odds that we're above 200? So I can just click and drag that line over and position it right at 200. And I can see, oh, okay, this is more meaningful to this trade. There's about a 41% chance that we land between 200 and 221, about another 10% chance that we land above that. So combined, about a 51% probability of maximum gain on September 20th. Oh, let me grab this one. I'm going to drag this over to the maximum loss at 195. Let's get that as close as we can. 195, close enough. Well, there's about a 35% chance that we land below 195 and we're in max loss territory on September 20th. So all of these numbers are associated with whatever date we've selected up here. So 35% chance of max loss, about a 51% chance of max gain. That's leaving us with 14%-ish that we're somewhere between max loss, or down here, max gain up here. Now, somewhere in between, what would happen if we wound up there? Well, if I have the right to buy shares at 195 and the shares are above 195, trader's probably going to do that. They buy the shares at 195. Someone else has the right to buy those shares from us for 200. They can do it? Probably not. They're just going to walk away with very rare exceptions. So in that case, if we allow this to get all the way to expiration, might wind up owning shares of stock, and that could change the future prospects for profitability or loss beyond just this expiration. But just be aware of that. But these percentages can be very helpful for a trader who just popped in this trade. They want to see how it can work out, how much can it make, how much can it lose, and what are the probabilities of those scenarios. All right, so let's see. Is there anything else that I wanted to address here? We can. I'm always tempted to just show so many features here. I do like to hit probably the most commonly used features and explain how they work. Let's do this. Let's come back up here. Let's hit that reset button, just reset the whole thing for all the changes that we made again. And there is definitely one additional feature that I want to show, and that is that this is interesting when we're looking at a single trade, but it may be conceptually more interesting if a trader is when a trader has a whole bunch of options trades going at once. How many of you ever felt just kind of lost? Wow, I knew what I needed from the markets when I had maybe just this long call. I need the markets to be bullish. But over time, maybe I built up a long call on this, and I have a and I have a bear put spread on that, and I have an iron condor on another thing, and I have a calendar spread up here, and I have a diagonal spread over there across a range of expirations and securities. And now I don't even know, how would my account be impacted if the S&P were to go up today? I don't know. There are just too many moving parts to keep an eye on. Well, this tool has the ability to just draw out a profit and loss projection based on movements of the markets rather than on an individual trade. So here's how we would do that. Right now, down here toward the bottom, you'll notice right now we're looking at the profit or loss for a single symbol. I'm going to change that. I'm going to change that to show a chart for my entire portfolio using something called a beta weighting feature. So I'm going to change that here. But right now, what this is basically doing is showing how it's estimating how our portfolio is likely to perform if ABBV keeps going up. Well, we need to change that. I'm going to change this up here to SPX. And what this now does is it's using assumptions of movements on the S&P 500. And it's using historical relationships of the individual stocks on which we have options to explain how those stocks and their options are likely to perform if the S&P were to go up or if the S&P were to drop. And it just summarizes it all into one chart. So let me simplify this for us. Right now, this is showing us a slice. This is the current value of the S&P 500. And on the price axis, it's showing us how our portfolio overall is likely to perform if the S&P rises. So what can you tell me? And you haven't even seen how this portfolio is constructed. You don't have any idea what positions I have in this portfolio. But those of you who are used to looking at this chart, tell me, is this a bullish portfolio or is it a bearish portfolio? Not every portfolio is bullish. You might think all of them are. Nope. There are traders out there who primarily have bearish strategies going. Yeah, this is a bullish portfolio, and this is telling me if the S&P were to go from, let's say, 64.55, and if it were to pop up to 6,500, that would be projecting an unrealized gain through the first expiration for options in this portfolio. So if I look down here, it says August 16th. That's because I have some trades expiring on August 16th. How would this portfolio perform on August 16th if the S&P were to go up? Well, that would be good. And you know what? Going up further would be better. This portfolio is definitely bullish. I can also see this portfolio definitely would not do well if the S&P started to drop. And the further it drops, the more I can potentially lose. Now, there's a hint here. This is our covered calls and short puts portfolio that we're using for this discussion today. Both of those are bullish strategies. So this chart is now showing us what we might have expected had we known that, but it can show projected performance metrics for all sorts of portfolios. Very handy little feature there when a trader has a bunch of trades going on and they've lost their bearings. You can't even tell, am I even net bullish or bearish anymore? But guys, there we go. We've covered all the bases as far as I'm concerned for what I wanted to discuss today. I wanted to provide an in-depth introduction, pardon me, to this risk profile tool. Now, this is one that probably will take a little bit of repetition. I would suspect there's some of you saying, boy, Cameron, I appreciate a little demonstration. I didn't catch every single thing. I don't think I could go implement every single thing right now. That's okay. This webcast is scheduled to be added to our archives, put on our playlist after the webcast has been concluded. So you can go back and rewatch this. It can be a resource for you as you're learning this tool. Go back to it and use it as a guide just to get you acquainted with it. But then also explore the other functions on the tools. Lots of other things I could have shown. Ricebird says it's been very useful. Excellent. That's good. Yeah, you're also glad it's archived for review? Yeah, so am I. But it's time for me to let you go. That's lesson 7 completed. Coming up next time is going to be lesson 8. We're going to wrap up the series with a discussion of the tools tab, the education tab, and the help tab. I, of course, am especially excited to talk about the education because that's what I do. But in any case, I hope you put it in your calendar to join me again next Wednesday for that discussion. Now, I have other webcasts in between now and then. You're invited to join me in those, but make sure that you're taking advantage of all of the resources that you have available through Schwab Education, and they extend well beyond just these live streams. So a couple of things to note if you're new to this. Number one, if you haven't subscribed to our Trader Talks channel just yet, do that now. You can go down in the lower right-hand corner, click on that subscribe button. It doesn't cost anything. It only takes a second. But our YouTube channel is where we house our concluded or previously delivered webcasts. So the YouTube channel name is Trader Talks Schwab Coaching Webcast. You just find that channel on YouTube. And then you can go to the playlists here. So if you didn't catch lessons 1 through 6, this is where you'd find it. Go to the playlist, scroll all the way down to the bottom. Mine just happens, this series happens to be the one that's at the absolute very bottom. There it is, Getting Started with Thinkorswim. If I click on View Full Playlist, you'll see right there, as I scroll down just a bit, Lesson 1, Lesson 2, Lesson 3, Lesson 4. It'll get you used to all these other tools on the platform. Also, make sure that you are following Kevin and me on X. If you have an account with X, you should be following us there, because this is where we can go offer observations about developing market events without having to wait around for the camera to be turned on. So you can find Kevin here on X at Kevin Horner CS. You can find me. Here's my handle at Cameron May CS. Give me a follow. But like just earlier today, I noted, hey, we started the session off with a gap up. Do my followers think that gap is going to hold? And then, nope, didn't hold. That's real-time stuff that I can't do if the camera's not on through any other mechanism. And if you reply to one of my posts, I try to reply right back to you. I've done about 10 posts already today, either posting information or replying to people here on X. So thanks for giving the follow there. Everybody, thanks for all the thumbs up. Got about 100 people watching the live stream right now, and I can see that 43 of you enjoyed that discussion of the Analyze tab. If you watch one of our webcasts and you like it, make sure that you click that thumbs up button. That serves a couple of purposes. It's a nice bit of applause for your presenter for the job well done, and it definitely feels like a pat on the back to us. It's always appreciated. But also, it gives a boost to the webcast in the YouTube algorithm when we post that video, and helps more people find that video so they can learn about the Analyze tab from someone who's been using it for a long time. So thanks, guys. I'll let you go. I will look for you in Lesson 8 next week. I'll look for you in my other webcasts throughout the week. I'll also look for you on X. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.